right? Can you use chart lines? Yes, you can, right? But the candlesticks in itself will tell you a lot, right? You can't use charts, but candlesticks tell you a lot more, right? So now I know that that's what I'm getting my entry. And you see this exact thing is what price does, right? So looking at this and setting your limits, you have your limit entry right there. And stop loss just above, just below that area. How many pips is that, guys? That's a 3 pip risk, isn't it? That's a 3 pip risk. So in a 3 pip risk, I'm taking my trade where? Towards demand, towards supply rather, isn't it? Taking my trade towards supply. Now you see how much I'll be in profit right now. What my risk for reward ratio would be, I'll be up about 1 to 40, 1 to 45. Right? So there's a way to take partials, and there's a way to ride your way up. Right? You might think that you don't have that how do I put it? You probably are not so sure, or you still do not trust your analysis. That's why you might have take profit areas or closing too early when you know that this could be your risk for reward potential, right? What's this? This is a 1 to 170 risk for reward, all right? A 1 to 170 risk for reward in this trade, and you're up about 1 to 40, right? So you're up about more than quarter of the risk for reward already in the trade. So doing that, you could have take profit areas, right? You have TP1s, TP2s, TP3 as you work your way up, and then you do what? You also, as you're working your way up, what you're doing as well is closing partials and then trying to see your entry areas to get into more buys, right? As you're taking your price up. So TP1, you're looking at supply areas. So how I do it is I also look at where supply has showed much more strength than demand in the past, right? So looking at this area, I've got this drop base rally, and then I see gets tested here, all right? You see gets tested here. So when it gets tested, what happens? It creates a supply body to break it out, right? It creates supply to break it out. Now I'm still even on the 1 hour chart. Create supply to break it out. So I know that that's the base. Then I'm interested in taking price as TP1 right there, and TP1 has been hit. All right, TP1 has been hit, and that's why what do you guys see? That's a drop. That's a rally based drop. Now we see a rejection from the supply. Right, so TP1 has been hit. Right, so now I've taken partials. I could take maybe 25% off my initial buy. All right, take 25% off. How many pips is this? This is about 130 pips. Right, and in just 2 days. Right, in 2 days, got 130 pips. 1 to 45 risk reward on one pair, on one trade. Right, so I hit that in 2 days, and I'm taking partials. Now I can show you entries as you walk your way up. Right, as you walk your way up, show you entries that happen. So your entry opportunities, let's go back to the 5-minute, which is where the source really happens. So I'm showing you guys your entries, and now based on London Open, New York Open, and all of that, right? That's where you now start with your entries timing. So let's fast forward to New York and London. That's 8 a.m. So 8 a.m. is around here. All right. This is London Open right here. Perfect. Perfect. All right. So now, let's say all of this has not happened yet. All right. Forget that all of this hasn't happened. And this is where we wake up in the morning for London Open, and then you're watching price. Now, take note of strength. All right. Take note of strength. Strength of demand. That's what you're looking for, isn't it? For it to get into a buy. Strength of demand. Now, look at this area. You have your rally, base rally here, and you've also seen it get tested. All right, it's been tested, and then it went up. And what happens? Price breaks out that area, showing you that supply gains strength here. Right, showing you a supply gain strength in the zone. Now, what happens around there? Price rejects off that supply area in here. All right, there's a supply area in here, and you can see that on a smaller time frame. If you go maybe on 3 minutes. All right, look at that. There's a drop-based drop in there. All right, that's what broke demand in the very first place. All right, that's what broke demand in the very first place. So you see that price has been reacting around that zone. You see the rejections, right? Price reacted up the proximal rejections, and then what happens? What happens? What do you guys see that happen? What happens? Someone tell me what they see. What happened? Strength, exactly. The strength of demand. Demand took back its strength. It broke up that supply area, showing you that it has collected the strength back. And what do you see? Break out demand, break out supply. What do you see? What's this? What's this? Again, it's not magic, right? Albria, exactly. That's his demand body. That's a rally, that's a base, and that's a rally. Taking out supply. So now, towards your timing, it looks perfect, isn't it? Perfect. That's a rally, base, rally. Then, you simply wake up in the morning. Anywhere you want to set into your entry is fine. Even if you want to do on the proximal, it's fine. Just have your stop loss below. What's that? 3 pips again. That's 2.7. 2.7 pips. If you had it here, it would be less than a pip. It will be 2 pipettes. Right? If you did your stop loss, let's say to the close of the body of the candlestick, it would be about 1 pip. All right. Anyway, you wanted to put your entry is fine. Just set your limit, go to sleep. All right. Because why? You've recognized strength yourself. That gives you a lot of confirmations that you need. Now, this is your re-entry to do what? To go to TP1, isn't it? Now let's find TP1. What was that entry? Okay. So TP1 is right here. Right? That's the 1 to what? What's the risk reward? 1 to 28. Alright? You had a 1 to 45, you had a 1 to 28. Okay? This is how many pips? This is 95 pips. Right? On the first one, you had over 180. The next one, you have 95. Alright? And that's off London Open in the morning. So even if you miss this one, you'll catch the next one. Alright? How beautiful is it? How amazing is this, guys? So the market is not going to do anything else. It's doing exactly what it needs to do. Right? So right now, I feel like price is still coming in for more demand areas. Right? For more demand areas. Now that's not even your problem, because now you've had your partial secured here, you've had another partial secured here, and you're good to go. Alright? So you've secured 1 to 45, 1 to 28. Right? That's about 70% in 2 days on your account. You've run your account by more than 70% in 2 days, right? On one trade, on one pair. So on 2 trades on 1 pair, right? So that's how to stick to it, right? So you don't get confused and you start looking for, oh God, where do I get my entries? How do I get in here? Oh, I'm gonna miss it. How do I do this? How do I do that? Follow price, right? When you see yourself making those decisions, those indecisions, follow price. Start off from the higher time frame and work your way down, and make sure you see exactly what price is doing. Where is strength in the market? Where's the strength of demand in the higher time frame? On the 4 hour, where's the strength of demand on the 4 hour? Where's the strength of supply on the 4 hour? Where's the strength with your time zones for London Open, New York Open? Where's the price mitigated? Always make sure you find out these zones, right, when you're practicing, so it gives you a lot more idea and a lot more knowledge about what price is doing. Alright? That way, trust me guys, you're gonna bang out the strategy. Right? It's as easy as it is. Okay? So guys, that's the psychology. that I just wanted to share with you guys, right? I wanted to share with you guys that it all boils down to you trusting the process, trusting that this shit works, and then have a lot of patience to see that it hits your take profit, to see that it does exactly what you planned, right? How many pairs should I follow to start with? That's another thing, right? One thing you don't want to do as a trader is have a lot of pairs that you're trading with. Like I've I've taken note of really successful traders. Successful traders do not trade a lot of pairs, right? They do not trade a lot of pairs. Most of them trade 2, 3 pairs, 4 pairs maximum. I've seen. I know someone who trades just 1 pair and is profitable. Is a millionaire in trading, 6-figure trader in trading, right? Those traders, they do not trade a lot of pairs. You know why? Because trading a lot of pairs would take your eyes off sweet entries. You're going to miss a lot of trades when you're looking at a lot of pairs. Secondly, you're not going to understand the pair itself. You're not going to understand the time when the pairs really move well. Have you seen how the pair moves in London Open? Have you seen what the pair moves in New York Open? Have you seen how the pairs react at New York Stock Exchange Open? Do you know how the pair reacts at midnight? Like if I ask you a question, do you know how the EU moves when it's 8 o'clock? Do you know what happens? Right? You might not know all of these things because you're not trading very specific pairs. And that's why you do not understand them personally. Right? Remember that trading is actually a personal and a private journey. So you want to have personal pairs to yourself. Pairs that you become a master for. Right? So stick to very few pairs. If you're trading Forex, pairs have 2, 3 pairs and be good at them. Right? Because trust me, guys, you only need just 1 or 2, 3 pairs for you to grow your account, basically. You can use just 1 pair and grow your account 100% in a week just by trading 1 pair. Check this out. This is just on NU. And NU in 2 days, I've been able to grow my account by 70%. Right? So just a very few pairs and you'll be good. Right? Right now, some people are even done for the week, basically, because 75% is enough for the week. For me, I look forward to 100% at the end of the week, and I've hit 75% on Tuesday. So I'm just looking for 25%. I'm just looking for 1 to 25 risk for reward trade, and I'm done for the week on 1 pair. Right? That's just how it is when you actually speak to specific pairs. Do you have a funded account? No, I don't have a funded account. All right, I don't have a funded account. So guys, have anyone got any questions regarding what I've talked about so far? Have anyone got any questions?
Yes, Derek.
All right.
Just a quick one, because I know you've done your demand and supply zone and weekly zones.
Yeah.
How if you go on a daily, how do you deal with retracement? Let's say we know on a weekly, monthly we're bullish.
Yeah.
Then we wake up at 6 o'clock in the morning. Then the price just decided to go on a 2 days retracement. How do you pick that one up?
First of all, you have to walk away from the higher time frame. All right. So you see how I started? I started off looking at my major supply and demand areas, and I saw that this was my demand, this was my supply. So I know that I had to look for more buys, right? That's the key. Your directional bias is the very first key to your trade. Your directional bias. So now I know that all I'm looking for is buy, right? So seeing that it's a buy, I then go into the smaller time frame. So I start off from the 4 hour, and I want to see. I see price reactions. And price is what? Reacting off a demand zone. This is all demand. This is all demand. Alright. So I know that there's a demand area that I have to look at. So then I have to look to the left and see the story. Now the story here tells me that there's a pullback. This is a rally based drop, and then there's a drop based rally. So that is a sign of strength of demand in there. A strong demand. Look at the quality of demand as well, and look at the strength demand. So that immediately tells me that look for buys around here. All right. So when I know that I'm looking for buys around here, I go to the 5 minute, look for a break of structure. As soon as I see that break of structure, I'm executing. All right.